It has been a big year for M&A deals, seeing global deal volumes near $3 trillion so far in 2018. But our next guest sees the trade war as a big headwind to this activity. Joining us now is Charles Otton. He's global co-head of Global Industrials Group at UBS. Joins us here at Post 9. Charles, good to see you.
Thanks for having me.
So what's the connection here between the tariffs, these disruptions to international trade relationships, and M&A?
It's a great question. I think what we're beginning to see is the true impact of this noise, the tariff, the sentiment around foreign investment into the US being affected in the day-to-day M&A practices that we operate and practice every day. So as we look out and we try and prepare a company or an owner to sell a division, we're finding that whereas 2-3 years ago we'd have a lot of Chinese, Asian buyers who are often prepared to pay good top dollar prices and put down a big deposit, we're seeing that those lists are gradually being slimmed down, and many of those lists are essentially domestic or private equity focused.
So do you think this is essentially a chilling effect from a lot of the tensions out there, or do they genuinely fear that regulation will step in the way of the deal closing?
We don't know yet. I think some of this noise, particularly around CFIUS, is just happening. So anecdotally, I can tell you it's happening. Thankfully, the market's very, very strong. There's a lot of money out there. There's no difficulty in raising private equity money. But we are seeing the smaller list emerging of available buyers for some of the businesses that we might be selling.
Charles, let me ask you whether, I don't know if you remember going back to the late 80s, early 90s, when Japanese buyers, they were buying everything. They bought Rockefeller Center,
Correct.
They bought Pebble Beach, all this kind of stuff. The last couple of years have kind of reminded me, in terms of Chinese buyers,
Correct.
a little bit like that. They were buying top of the market trophies, like the Waldorf Astoria or some of the big real estate developments. Is this just a natural reaction to kind of the peak and the ebb and flow of foreign investors, or do you think there's something more substantive coming out of the potential tariff war?
Well, it's a great question. I think you have to break it down a little bit. I think one of the things we've seen is the influence of the Chinese government on outbound. So we've seen a reining in of some of the more excessive investments that perhaps you're referring to. So a lot of the activity within China and elsewhere has been to focus the China buyer or the Chinese buyer on businesses that they actually fundamentally understand. But at the same time, we found that because some of the more some of the CFIUS developments and indeed some of the regimes within China have slowed down M&A processes, those companies that may be under attack from activists who need to show that they are taking rapid action and quick action, can't afford to have months and months of closure risk, are opting to go a more domestic route or the private equity route.
I was just going to ask the domestic question. Could this open the door toward more American companies getting bought by other American companies, whereas they used to pass for competition overseas? Yes,
I think that's exactly right. And you have the same regulatory issues, but without the international overlay. So that's exactly right. And it's a phenomenon that will continue, I think. What we've seen, and I think you have some data on this, is that although the absolute dollar volume of deals is going up, the actual number is coming down. So with a strong market, we've seen an increased headline number of M&A transaction or dollar transactions, but the actual number coming down.